a short presentation, I'm sure. So we might take her first because I know we're going to be, yours is a little more lengthier.
Okay.
Okay.
Would you like us to sign in again later on, so you have privacy?
This meeting is actually open to the public, so it's up to you, sir.
It's moot, yeah. Okay.
Okay. We got Commissioner Cruz on.
The chief is going to sign in. I just had to resend the invite to him, so he'll be in
Okay.
a second too.
All right.
Good evening.
Hello there.
Hi.
Hello again.
Hi.
So,
Good evening. I wanted to sign on for the first half hour, Commissioner Roach. I have to.
Yeah, no, I understand. I know we're expecting Tom, so we should be good with the quorum. As long as Tom gets here
Okay.
before you leave, we'll be fine. We actually have a quorum right now.
Okay.
So we
No, I
can-
have half an hour.
Okay. Let's get the ball rolling then. If you're ready, Lieutenant, I'm going to call this regular board meeting of the Honorable Board of Police Commissioners to order. And we'll have a roll call of commissioners. Commissioner Williams,
Here.
Commissioner Cruz,
Here.
Commissioner Farrow,
Here.
and Commissioner Roach. I'm here for the record. We have a quorum. At this time, if we can please observe a moment of silence for retired Officer John Chalakian, I believe it is, Lieutenant, and who passed away on April 13th, and also retired Detective Thomas Russell, who passed away on April 15th. We can have a moment of silence for those two officers, please. Thank you. We have acceptance of minutes. I will ask for a motion to combine C, D, E, and F, which are the regular board meeting, and 3 subsequent special board meetings. Unless anybody has an issue, I'll entertain a motion to combine those and accept all 4 of those minutes.
Okay,
So
so
moved.
It's been moved and by Commissioner Cruz and seconded, I believe, by Commissioner Farrow. All those in favor?
Aye.
Aye.
Any opposed? Okay. We are waiting for the chief. Oh, Jerry's the chief. Okay. Your chief, your timing is right on the money. Next item on the agenda reports is Chief of Police, and I'll turn it over to Chief Porter. Good evening, Chief Porter.
Good evening. I'm sorry, I was having trouble getting connected. It was a little tricky this time for some reason. So good evening. Not much to report. I just wanted to report that we've begun a recruiting effort to bring on new officers. So that officially launched yesterday. So we're now taking applications for new police officers. So the way this current process is played out, we're going to recruit over the next several weeks and months, and we anticipate having an entry-level examination in early August. And so I would say probably sometime this fall or early winter, that process will be complete. In addition to that process, let me back up again. So we are doing background checks on a current group of applicants, and they've already taken a test. They did their background, they did their polygraphs and sites. So we expect that class to start in July, August, and then we'll be given our entry-level exam in August. So as you see, we're moving along rapidly. We are continuing to try to achieve that goal of 100 officers within this last fiscal year. Right now, we're at maybe upper 50s that we've hired so far this year, and with the class that we hope to hire, and we hope to start in July, I think we're going to have a pretty big class, either 2025. So that should really push us up. We've had some lateral interviews. Actually, I'm interviewing some lateral candidates on next Tuesday. I have 5 interviews that I'm doing, and there's other lateral applicants that are also in the process. So as you can see, we're moving along really well in terms of the our recruiting process and bringing on new officers. As it relates to crime, we are significantly down in our gun violence and our shooting incidents, our shooting victims, and our fatal shootings. We're significantly down in all of those areas, and we could continue to trend down. We are up slightly in our felony assaults. Strangely enough, a lot of our we're down in the shooting incidents, but we do have an increase in our felony assaults slightly. A lot of different objects being used, blunt objects, and some knives in some instances. But beyond that, we continue to trend down in our violent in our felony assaults. But beyond that, as you know, we continue to seek grant opportunities and in terms for a new building. I did see an email that we got back recently regarding some grant opportunities that we put in. So I'm hoping that we will be able to secure some grants really soon to help us with the architectural study for a new building. So we're moving along. We're making a lot of progress. The class that graduated recently, they are on the road now. They are in the field training program. In terms of my discipline, I think I'm up to date with all my disciplines. I have a couple of PC ones that just came in, nothing of any significance. But beyond that, I think we are moving in the right direction. We are going to be given a sergeant's examination in late June or early July. So we have a lot of young officers now that are studying hard. But beyond that, I'm open for questions if you have questions for me.
I have one, Chief, regarding retirements. I know last year, June 30th was a big day for retirements, unfortunately. And last year that it was advantageous, I guess, for some officers to put in their retirement, some of the changes in the pension plan. My question is, are we expecting many retirements at the end of this June?
So I did some inquiries, and I'm told it's going to be nothing like it was last year. I'm not hearing very many people. I'm sure Lieutenant Lyons can chime in if it's come for their numbers. I think we're going to have a small amount of people. Next June 2025 is obviously our big concern at this point. So no, I don't think we're going to have anything near that we had last year. There may be a few here and there. There are some people who are going to probably retire, but I think next June is really our June of 2025 is really the big concern at this point.
Thank you. Any commissioners have any questions for the chief? Commissioner Cruz?
Yes. Chief Porter, thank you for the report. You mentioned that crime is up slightly with felony assaults. Are some of them related to mental health issues that you know of?
Not off the top of my head. I haven't read each incident report that in depth. I think there just are garden variety of assaults that occur. And like I said, ironically, our shooting incidents are down. Our shooting victims are down, but felony assaults where someone may use a knife or they might use some type of blunt object, those are slightly up. But I have not seen a mental health component to that. But on the mental health component issue, we are looking to, we've applied for, through Congressman Himes, some grant monies to help us expand our mental health and police officer program. So we're looking to expand that. So hopefully we'll have some good news in the coming weeks or months to announce that we're going to be able to expand that even beyond the things that we're doing currently.
I'm just curious, is one of the areas that you're expanding is partnering, I should say, with social workers, I should say, on the scene? Is that part of the program?
So yeah, currently we work with our health department. We have a social worker who's assigned to the police department, and they work with one of our CIT officers. And we have roughly 50, 60 officers who are CIT trained to deal with situations where there's a person in need or a need of some type of mental health issue. So we're looking to grow that. So to make it more accessible on other shifts. So we're looking to expand that, and we're hoping through this grant opportunity we'll be able to do that. We'll be able to partner with maybe a social service agency within the city to partner with us to help expand that as well.
Yeah, thank you.
Okay, any other questions for the chief? Okay, great. Thank you, Chief.
I did
Thank you.
for you, Commissioner Roach.
Yes, I'm
Just
sorry.
one thing, and maybe tomorrow, or I'll give you a call. I did get I know Stacy, we got an email from Ken Flato about some other retirees, and we just need to figure out how we want to handle that forward to make sure we're providing proper services for those people who are still on that plan.
Yeah, Lieutenant Lyons and I touched on it a little bit earlier today, but we can follow up tomorrow. Absolutely.
Okay.
Chief, I wanted to say thank you to the chief. I understand that we got Topolsky over into internal affairs.
Yeah, he's there. I saw the suit on and I didn't recognize him. So,
but thank you so much for taking care.
Thanks for your cooperation there, Chief.
No problem.
Okay. All right. Unless there's any other questions for the chief, thank you, Chief. We'll move on. We don't have anyone present from the union this evening, I guess, and Internal Affairs is not due a report this evening, and nothing from the clerk as well. So we are going to move on to new business. I'll take the agenda slightly out of order before we hear from Mike Brewy. We have a request from Council Member Anita Martinez to address the board regarding a parking issue at 6th Street and Bunnell Street. Also a request for a stop sign on Wilmot Avenue and Orange Street. Anita Martinez, are you with us? Oh, there she is. Okay.
Amen. All right, thank you. All right, my name is Keith Williams. I am president.
I'm sorry, I was walking out of another meeting.
Yep. Okay.
So 1 second, let me get to a corner where I could talk. Okay, so 2 things which I've already submitted to Lieutenant Lyons. One is regarding parking issue on Stratford Avenue, which I understand and I know that it is a state road. And there are some requirements to making changes to state roads. So it's between 6th Street and Bunnell. But there is a new business there, and the other room. There's a new business there. It's a Dominican hair salon, and they are having issues with parking. We have an issue on Stratford Avenue where we have a liquor store right next door to the business, and a lot of the individuals who are consuming liquor park their cars there. They hang out. To me, it's basically loitering. There are no loitering signs, but it's not being enforced. I'm not pushing for it to be enforced because our police department is already short, and we have other issues that are happening in the city that are more important to be enforcing loitering. I'm just requesting signs, possibly maybe 1 hour signs, probably 3, I believe, should be sufficient, which will help this business continue to prosper. They are fairly new. She only moved there in February. So I would hate to see a business leave the area because of lack of parking. So that is one. My other concern is the corner of Wilmot and Orange Street. There is no stop sign at that location. I'm requesting for a stop sign at that location if possible. That is a dangerous area. The cars fly right straight through from Wilmot straight onto Orange Street. There is heavy traffic crossing from Orange Street over, daily. So if an individual is flying, they'll fly right onto the traffic that's going onto Orange Street instead of stopping, because they don't even stop. There's no stop sign there. That one is very critical to me before we have a fatality there. And I believe that the engineer department I spoke to our engineer, Mr. Yerquiti, doesn't have a problem with it. I just have to go through the process, which is through you all, and submit the documentation, which has already been submitted.
Okay, good. A quick question. The address of the business you were talking about, the one that recently opened, that having issues with loitering and parking, what's the name of the business again?
You know what? I don't.
Oh, okay. No, I know you're tied up with other stuff, but
Yeah, I don't know if Lieutenant Lyons has the information at hand, because I did send her pictures. I did not send her
okay.
the business, but I can do that. I can send her the name of the business. I'll
Well,
actually.
and if you're requesting 30-minute parking signs or 60-minute parking signs, I believe you said, that needs to go through the city traffic engineer initially also, or the request could be, passed along from the clerk. But it's the same process as any other sign requests.
Okay, so why don't I do this, Commissioner Roach? I will submit all that information over to Lieutenant Lyons. I'll take a picture of the area, get the exact address, and I believe Lieutenant Lyons may have submitted the information, excuse me, I sent to her. She sent it over to our engineer department.
I did. Councilwoman, is this the one that he stated is on the state road as well?
That is the one on the state road, the last room. It is the one on the state road, which is on Stratford Avenue.
Okay, I did send it over, but I can also explain to the council. Well, I can pull up the emails too. I believe he stated that it doesn't really go through him if it's on the state road, which is where we might run into a little bit of a hiccup. But I can look up those emails and find out for sure and then talk to the council.
Okay, and I'll submit over the exact name of the business and the address, and we'll see what we can do. I mean, I will probably also, understanding that it is a state road, probably submit something to the state and see if they're able to. I mean, I don't want to open a can of worms with other stuff on a state road, but I just hate to see a business, leave the area because we have individuals that are just loitering in front of an establishment with nothing else to do.
I believe Powell also said if we can do that, he'll forward it off to the state. So
Right.
we can, if you send it to me, I'll forward to Powell, and then we can let him forward it off and do the rest of the work from there, if that's helpful.
Okay. And that will be it for me, Commissioner. I appreciate your assistance in this, and I'll get that information over to Lieutenant Lyons.
Okay. Thanks, Anita. You can get back to
Thank
work now. All right.
Oh, thank you.
All right.
Commissioner Anita Martinez,
Yes.
is that Dominican Diva Beauty Salon?
No, it is not. She has parking. Her business is adjourned to the empty lot that belonged to the Mose family. So she has parking.
Okay,
It's the
okay.
store, which is right next to the liquor store. And I apologize for not having the address.
That
but I will-
one's further down.
It's before the Dominican Diva. It's right where the plaza was, right in the middle where that plaza was. Like there's an apartment building up top. So
Mhm,
it was
mhm.
where the East End Community, the East End Community Council was on the corner when Ted Meekins used to run it. And then
Okay.
it's to the apartment building, then it's the liquor store, and then it's her salon.
Okay, yeah, because I'm not showing anything else on that for as a Dominican.
It's fairly new, so it
Okay.
may not
It may
be-
not come up. Okay,
has moved in February, actually.
okay.
Okay,
Thank you.
thank you. I appreciate you all.
Yeah.
Thank you so much for the rest.
Thanks.
Thanks. Okay. Moving on, back to 3A, presentation from Raymond James Financial Services regarding the pension account. We do have Mike Brewery here, who's been with us for quite some time. And Mike, I'm going to turn it over to you. You can introduce who you have with you this evening. We don't have the ability just yet to go in executive session to hear each presentation individually, but maybe we can work it out where they can get off the call and you can contact them to come back on when needed, okay?
That's fine. That's fine.
Commissioner, I'm sorry, Mike, real quick, Commissioner, I just want to recognize that Commissioner Lyons is on.
Oh, I'm sorry. Yep, yeah, for the record, Commissioner Lyons, I meant to mention that before after the chief's report. Thank you, Lieutenant Lyons, for recognizing Commissioner Lyons. No relation.
Just a great last name. No relation.
Yeah, oh yeah, no, absolutely. Yep, and great football team too. Yep.
That's
Anyhow, I'll turn it over to you, Mike.
okay. All right. This is like Hollywood Squares here. I like up down at the bottom here. Good evening, commissioners. Thanks for letting us join this meeting here tonight. A special shout out to Lieutenant Lyons for getting us zoomed in and working all that out and distributing all the materials and stuff. That was a heroic effort on your part to do that, believe me. In any event, well, we're here to go over, do a review of the Bridgeport Police Pension Plan B portfolio, and we've got, which includes 3 managers. We've got Estabrook here, we've got Wright here, and we have Raymond James, myself here. It's great to see everybody again. I think we'll start out, we're going to have Amit Khandwala, who is the chairman and CEO of Wright Investors Service. You're going to lead us off, Amit, if you would, and you're going to take us through the your portion, the Wright portion of the plan. And then following that, we're going to have David Foley, who is the director and COO of Estabrook Capital Management. He's going to do his portion of the plan, the Estabrook portion of it, and then after that, I'll walk you through the Raymond James portion, and I'm also going to provide an overview of the performances and financials of the total plan, all 3 managers, Estabrook, Wright, and Raymond James. We'll spend some time on that. We'll keep the presentations fairly brief because I know you got a full agenda tonight. We also have, by the way, I think Chris Gacci. Chris, are you there? Did you come? He is.
Yes, I'm here. I'm here.
Okay, good deal. Thank you. He's from UBS, and he is head of the custodianship of all the accounts, the Estabrook and the Wright accounts. So he's with us, even though we don't see his picture there. Okay. I guess I'm going to turn it over to you, Amit. Are you all set to go?
Absolutely. Good evening, everybody, and thank you, everybody, for allowing us to present. As Mike mentioned, I'm going to keep my comments brief. The numbers are good. The portfolio is doing excellent. And so everybody should have the presentation, I assume. Turning to page 4 of the presentation is the allocation of the portfolio. The portfolio has roughly around 64% in equities, which is shown on the table on the right, and fixed income is around about 36% with a fractional amount in cash. What you will see within the equities is that most of the equities are invested in the US markets, driven by mostly large cap equities, which has been the place to be. For the last few years, large caps have outperformed pretty much all the other asset classes, with the S&P being the best house to be in. You also have a small portion, roughly around 9% in dividend-paying stocks. So, the fear was that eventually the markets would correct because the markets have been doing quite well. And if they do, we will collect the coupons rather than have to be forced selling into any of the equities. So, and we have most of the equities on the US are within a conservatively managed large cap core equities, focusing on very, very high quality securities. And the most important thing is all of these security portfolios are individual securities. They're not investing in mutual funds or ETFs So there is no additional cost in managing those assets. On page 5 is the investment summary. We've shown it in two ways. The first column is calendar returns, and then the second column is based on your fiscal year returns. So you can see that in the calendar year, we started with roughly 23 million in assets. We had income, and again, this is only 3 months. It's only 1 quarter. The net income has been about 78,000. In total gain is been 1.4 million, with 1.4 roughly coming out from capital appreciation. So we had a very strong Q1 of this year. When you look at the fiscal year period from June 30th of last year through March, which is 9 months, not exactly a year, we started with about 21.9 million and had net income of about 230,000 with investment gain of about 2.3 million, bringing the total investment return for the 9 months to about 2.6 million, bringing the ending market value to about 24.5 million. The important point I'd like to bring out at this meeting is the little table at the bottom, and that is from the time we have been managing the account, which is the Pension Fund B, which goes back almost 29 years now, at about April 25, 1994. We started with a deposit of about $1 million, and we've had a net cumulative return of 23.5 million. So really, it has blossomed over the years, and we are very, very happy to have provided these returns to the plan. On the next page, on page 6, are percentage changes. I'll just focus on the more recent. This has a lot of history there. But if you look at the middle column, which says net returns, in 2022, it was a tough year. The markets were down. You can see S&P was down about 18.1%. Your account was down 15.9%. But then you push forward into 2023, and your account is up about 13.8%, 13.9%, I would say. And then going further down into the year-to-date number is 2024 fiscal period through March 31st. Your account is up about 12%. But you look at the calendar year period, which is a little bit below that. For the quarter, your account is up about 6.3%. For 12 months, it's up about 16%, and then so on and so forth. So the account has done well despite the negative in 2022, and that's why long-term investing is very important in any investment portfolio. And the important part is you remain diversified, which is where we are. You don't put all your eggs in one basket, and that has reduced the level of risk in your portfolio, but also you're giving up some return. And that's okay, because as a pension plan, you really don't want to take a lot of capital risk on the portfolio. And that's what we try to achieve with this portfolio. So with that, the next few pages are just information on the portfolio. I leave it with you to review. And of course, if there are any questions, Mike can help you, or Mike can reach out to us, and we'll be glad to help. But with that, Mike, I pass it on to you in the interest of time.
Very good, Amit. Very good. Thank you. Thank you. Any other questions for Amit before he signs off here? You all set?
I have a question.
Commissioner
I'm sorry, because I have to log off. I have another commitment. But real quickly, I always find it interesting. On page 6, where you just quoted the period ending 3/31/24. On the net return, you mentioned for the quarter in a year, it went up from the net return from 6.25 to 15.64, and you stopped there. So that was in a year. In 3 years, is that in the average? It went down 4 point?
No, sorry. Yeah. Yes. No, that's not what this means. What that means is for 3 years, your account has gone up by 4.2% every year for each of those 3 years. And then for 5 years, it's gone up by about 7% each year, every year for the 5 years. It's not gone down at all. That's
Okay, I just wondered that's when you stopped. So I want to make sure
yeah, I should have completely. I didn't want to go through
that
each
it wasn't
number.
going down, it's going up. Okay.
Yeah, no, it's actually every year you have gained 7% return every year for the last 5 years.
Appreciate it. Thank you so much.
Sure, you're
Thank you,
welcome.
gentlemen. We'll see you next time.
Okay.
Here, bye-bye.
All righty.
So,
Okay. Oh, Dave, there you are. Okay. You were
Mike, am I all
down
set then?
below on the Hollywood Square chart there. Yeah, Almut, we're all set. So if you want to sign off, please feel free to do so. Okay.
Good evening, everybody. Thank you.
Okay. Take care. Thanks. Appreciate it. Dave, okay, you're on.
Terrific. Thank you all very much, and it's good to see you all and hear your voices again after a year. So I hope you've all been well. Anyways, just to give you a quick update on Estabrook as we kind of go through the presentation. Some of you might be familiar with seeing kind of our general beginning intro pages again, and very much they're all the same, right? Our philosophy is sort of still very much the same, a goal of preserving and building wealth over time. Our process is a top-down and bottom-up driven discipline, informing fundamental security selection and sector allocation. We're managing about $1 billion, and we've been in the business for a while. If we flip to page 2, you can see our investment philosophy and process, and it's basically starts with a macroeconomic forecast. Where do we think the world is going? Then what trends do we sort of want to focus on? And we'll talk a little bit more specifically about individual stocks and such as we get further. Then we do fundamental research, stock selection, and then kind of manage the risk on the back end of that, position size, things like that. As we go to the next page, page 4, this is really the risk management portion of it. And this is a function of, we meet daily, we hold weekly meetings to discuss specific stocks and things in the portfolio, what we see going on, economic news and information and all of that sort of stuff. Look at fundamentals and price targets, and then review position sizes. Do we own too much of a stock? Do we own too little? Those kind of things. As we get to the portfolio review here, which is flipping a couple pages, page 6. This is our performance. Our information goes through April 30th. So just to let you know, we've had a nice start to the year. Markets had a nice first quarter, had not a great April, and then have had a strong May and thus far. As you can see, we had a nice first 4 months of the year. Our trailing 12 months, so kind of April to April, have been quite good. Our 3-year returns are almost 5% annually. So that's 5% a year versus 4.41 for the benchmark. And that goes all the way out in those years. As we get into sort of what does the portfolio look like, which is flipping pages to page 7, how we're allocated as of 4/30 is we're about 65% stocks and about 31% fixed income with a 4% cash buffer, right? And in that's sort of our allocation as to where we have been. That flows a little bit as stocks and asset prices are high. Our continued focus is to try to get that 64% closer to 60%, just because we've had a strong month and it's not a bad time to sell, type of thing. If we flip the page to page 6, this is a bit of our fixed income outlook. So how we're feeling about fixed income. As you all remember, it was a pretty recent memory in that bond yields, mortgage rates were all incredibly low. So the government was borrowing money from anybody in the treasury market at next to nothing, meaning 1% for 10 years. If you look at this chart, even below 1% going back in 2020. So buying bonds was almost more or less a place to hold money as a store of value than to actually get any kind of returns. Over the last couple of years, as the Federal Reserve has raised interest rates, that of course has changed. And now there's a place to actually get some returns in them. We're pretty confident, or we believe that the Federal Reserve is done with their rate hikes. So we probably won't see rates move much higher on that kind of front end, which means around 5.25% is where they are. And so we view this as not a good opportunity to sort of go buy some bonds and go buy some bonds that are, not just 1-year bond, but maybe some 2 and 5-year type bonds. I'd like to stay relatively short, but that's where we are with it. And as a result, we've seen much better returns. The interest that we're generating out of the portfolio is way better now than it was a couple of years ago. As we flip pages to get to page 9 here, this is just an allocation of what is the portfolio, the equity portion of the portfolio look like with the bar charts. And I think what to point out is this is sort of how our stocks reflect relative to the S&P 500, which is kind of the common stock benchmark. As you can see on the left side, we're in blue, we're a little bit underweight technology relative to the S&P 500. But we're up there with almost over a quarter of the portfolio invested in technology stocks. And as you're aware, technology stocks have really become a large portion of the S&P 500, and a handful of them really have Apple, Microsoft being amongst the two that are ones that we hold that are large stocks in that area. Obviously, the technology front, from a standpoint, should do relatively well going forward. Those kind of companies have lots of cash flow. Sales are good. People are continuing to buy their products, whether that's Apple iPhones or Microsoft services and things like that. So they should continue to do relatively well, and we feel relatively good about that. In that space, there's been a lot of kind of, let's just call them high flyers, and that would be companies that are involved in the building of AI and artificial intelligence, whether that's the chip company that makes the AI chips or everything that's in there. For people like us, that some of those chip companies are quite expensive from a standpoint of how we value them. So we've gone out and sort of started to look at kind of, well, what are the other ways to play this? And some of this is as you probably have all read, is going to be in the power consumption. So, utilities, a company like Eaton, which is an industrial company that we own, has a play in that sort of world. And those are ways for people like us to kind of get our heads around an exposure to AI, but not having to pay the price that some of these other stocks command at present. We're a little bit overweight financials, and that has proven to be a good bet for us over the last 12 months as financials have done well in, again, a higher interest rate environment. A lot of that is on the fact that the consumer has done better than I think perhaps many of us expected the consumer to do in America over the last, basically since the end of COVID, if that makes sense. But bank stocks and insurance companies have done well. I know we all probably we own Chubb, so I guess we have some exposure to it. But if we all have to pay our auto insurance bills, it's sort of frustrating these days, isn't it? It's not sort of frustrating; it's quite frustrating. On the healthcare side, again, we're a little bit overweight healthcare relative to the benchmark, and with the exception of Pfizer, which we own, and Pfizer did great through the pandemic, but has struggled since then. Many of the stocks have done quite well for us. Okay. And again, the thought process there is a simple demographic one in America. We have an aging population that will be using more and more healthcare. There's a different government question about how we pay for that, but hasn't really boiled up totally yet. And so there are some real tailwinds to the healthcare sector. Consumer staples, as you can see, is a sector that we're definitely overweighted to relative to the benchmark. Now, the reason there is one particular name, Costco. Costco is considered a consumer staple as opposed to a consumer discretionary. The stock has done unbelievably well for us over the last number of years, and really been one of our best holdings. It's, I guess, almost if you go there, you kind of right. Type of thing. So it's been a fabulous holding in that we also own things like Procter & Gamble and Pepsi. And if I think about it and going forward, and they've been okay, and listening to their quarterly earnings, have been fine, but there was sort of some concerns out of McDonald's and Starbucks in their last earnings. Is the sort of consumer breaking, and does that mean that maybe the consumer isn't going to be affording Tide and Bounty in the same way that they might have once, or Snacks, which is Pepsi as well. So we're focused on looking at that as well. On the industrial side, I mentioned Eaton as one of our holdings. Eaton's involved in the power business, so that is done quite well. Honeywell is another holding that we have, and Honeywell is in the avionics business, which is basically all of the stuff that goes in the front of the cockpit of an airplane. And that demand for air travel and a refresh of airplanes globally is continuing and ongoing, and those sorts of things. We also in industrials own 2 railroads, and Union Pacific and Norfolk Southern, and both of them have done quite well, simply as we move a lot of stuff around this country. A lot of stuff comes to our ports and goes from there, kind of a mindset. Communication services, that's our AT&T and Verizon, which the stocks themselves have not done quite well, but also within that is Google, which has done very well. Energy, our exposure is largely just confined to Chevron, so one holding. Obviously, oil prices are up and gas prices are frustratingly high. It seems that for the first time in a while, the energy companies are actually exhibiting a good bit of discipline about how they spend money. They classically were the complete boom and bust type people, but now it seems that they're much better at how they're allocating their money and being much more deliberate in that, which is good for the shareholders, basically. And if you think about it, oil prices, our thought on energy prices or oil prices is they should stay somewhat around where they are, and that the supply-demand balance is relatively in line. I don't know that the oil market is pricing in a lot of global risk, but it hasn't done that for a while, meaning it didn't get, for a while it got upset about Ukraine, but it didn't get crazed and hasn't been overly concerned about the Middle East since, and the death of the president of Iran and things like that could be destabilizing. Part of that is that China's economy hasn't been great. And if China's economy picks back up, they will, you'll obviously see increased demand for energy, and that could send prices higher. Consumer discretionary, I mentioned a little bit, our exposure there is just limited to Home Depot and Nike, which are sort of 2 kind of blue chip classic brands, both of which have done okay. Nike's had some issues. Nike's done a nice job of trying to go direct to the consumer, but they recognize some inventory issues. So the stock was a little bit off in the first quarter. Home Depot has continued to do well, but I think, as we all know, all of us that went to Home Depot for some sort of home improvement project over the last 3 or 4 years either completed the project, in my instance, got yelled at by my wife because I didn't complete the project and sort of half done, or any of those kind of things. But some of that has rolled over. So, and with home prices and mortgages where they are, they're not seeing as many kind of new home buyers coming in. But the stock has continued to do all right. I mentioned a little bit utilities. One of the big things of people talk about with artificial intelligence and chips is that you're going to see a real big increase in the need for power, because these kind of chips and running all of this requires a lot more energy usage than a standard data warehouse. So utilities obviously are an interesting place where traditionally, as everything has gotten more efficient, we would have thought that utilities would sort of see a slow decline in terms of demand, but that actually could level out or go up. And people in the Washington, D.C. area, where they're going to build a lot of these data centers, are quite concerned about the needs. And you've seen some utilities go back to saying, hey, we were going to get rid of a nuclear power plant, let's keep it going. So there's a fair amount of that sort of stuff going on in the utility space. Materials, we have one holding there, and that is Corteva, which is a seed company. They sell Pioneer seeds, which are corn and soybeans and hay seeds and all of that kind of stuff. And as, again, increasingly wealthy populations in the world, or people having more money, they're going to eat more food, and there's where we see things going, right? And that's sort of the major difference. So that's the portfolio and how it's constructed at present. If we go to the next couple pages, it just sort of shows the holdings. I touched on a couple of them, and went through them all. So it might be just quickly to give you a quick overview of how we think, where we think things are going forward, which gets us to kind of the economic outlook, if that would be helpful for you. And that would be page 15. Quick point on this, inflation. The Federal Reserve wants inflation to be at 2%. It's been stuck at north of 3% for a while. The last mile part of it is kind of the hardest. It seems like it's coming down. It doesn't seem like they're going to have to raise interest rates again. But you know, it's that last bit that's always kind of the hard place to get to, and I don't know how long that will take. The next page is, you know, interest rates, the federal funds rate. The last hike was July of last year. So we're not even a year into kind of where we are in terms of hikes. They often say that in order for interest rates hikes to really have a bite, it's a 12 to 18 month lag. So we're really kind of not in the full point yet of 12 months in, if that makes sense to you. The Federal Reserve has continued to say that they're data dependent upon things. Employment's remained strong and inflation's remained strong. So that sort of stopped them from cutting rates. But the market has priced in a couple of rate cuts later this year. And, you know, we probably would see 2 towards the end of the year as we get closer. But again, that's all dependent upon employment and inflation as a factor. And then the final chart we have is just employment, which obviously became awful during COVID and has come down dramatically back to less than 4%. Job market remains strong. It's not as strong as it has been. Wage growth is quite strong, is out there. And, you know, the hard part that continues is, you know, demand for skilled labor will remain as, you know, folks who've had lots of experience, baby boomers, slide into retirement kind of a thing. So we'll see some of that as well. But the employment market should remain quite strong as well for a time period, is our sense. What does that mean? It means that the economy should be able to roll along for a while. We feel relatively good about that. And, you know, it's a little bit hard, and usually in a presidential election cycle, markets have a pretty good year because the party in power spends to stay in power as sort of it goes. And that, you know, there's a good chance that that plays out again as we go forward. That's all I have. Is there any questions or anything I could answer for anybody or help sort of clarify or anything like that?
Any questions for Mr. Foley? Okay, no, I think we're good. Thank you.
Dave. Yeah,
Mike?
great. All right. Thank you very much, Dave.
Thank you.
We'll sign you out and finish this up. And I'll be as brief as I can, but I want to walk you through. I'm going to also try to share screens if we can. And it's disabled. The host is disabled. Could you possibly, Lieutenant Lyons is not here.
No, she is.
Lieutenant, is there any way I can share a screen? I was going to pull up the report for those that might not have received it.
I think everybody's got it.
Everybody's got it? Okay,
Yeah.
good. All right, let's go through. I'm going to give you an overview of the Raymond James portion, and then I'll finish with the summary and performance and financials of the total plan, which consists of the 3 managers. That's Estabrook, and that's Wright, and that's Raymond James. So let me get into it. The table of contents page. We're going to start pretty broad here with asset allocations and then work our way down to the portfolio performance and then performance of the total portfolio. All right. The next page is the asset allocation page. This is asset allocation with the pie chart. And this portfolio has mostly stocks in it, mostly stocks with about 10% of bonds in this portfolio. And the reason is that there are bonds in Estabrook and the Wright portfolios, and there's enough in there, but we put in just enough to bring it up to a sufficient level, and I'll talk about that later. But about 10% in this particular portfolio, again, mostly stocks in here. The other thing that's a little bit different, the two portfolios that were just presented to you, the Wright and the Estabrook, those portfolios are kind of growth oriented. Okay, they're very growth oriented. We needed to add some value to that, so we have value in this portfolio. So those are the basic changes between this plan and the other two plans. If you go to this page with the box charts on the top, kind of confusing looking, but there are two charts on the top up here. The left chart, box chart, is all about stocks. The right chart is all about bonds. So we'll start with the left chart, the stocks. On the left-hand side, if you will, the y-axis, talks about capitalization of stocks. That's large cap, medium cap, and small cap. 75% of our stocks in this portfolio are large cap. And why is that? It's because they're stable. Okay, they're established companies. They're conservative for the most part. We do have some medium, mid-cap stocks, and we have some small-cap stocks, but very small, just for diversification and cover all our bases. Okay, so that's what's capitalization, large cap, mostly large cap for stability. Across the top here, this is really the types of stocks there are. There are value stocks, stocks that are undervalued for whatever reason. They tend to throw off dividends, income, dividends. You want dividends if you're retired, you want to live on dividends, you want more value stocks. And then there's growth. Growth of companies like Apple, they throw all their earnings back into the company. You don't get dividends with growth stocks or anything like that usually. So you've got value stocks, you've got growth on two ends of the spectrum here. And if we can't determine exclusively if they're value or exclusively if they're growth, we put them in the center and they're kind of blend. Like with mutual funds like this account has, you have mutual fund managers that say, hey, we'll have a little bit of value, we'll have a little bit of growth here. So it's kind of a blend. You got value, you got growth, and you got blend. That's it. Just three types right there. And the allocations that we have in this portfolio are virtually the same. So that we have about 30-something% in value, 30% in something growth, and 30% in core. And this is because we want balance here. We're not going after exclusively growth or anything. What we want to do is balance the other portfolios. So this is really a balanced approach. Okay, any questions so far on that? All right, let's move over to fixed income. We only have about 10% in fixed income in the portfolio. And on the left-hand side, you see quality. That has to do with the credit quality of bonds. No matter what they are, municipals, government, corporate bonds, this is to do with the credit quality. For a portfolio like this, we want good quality. We want good quality. High quality is great, but it doesn't pay us anything. Low quality pays you more, but it's very risky. Okay, so we want to be in the center, and that's where we are. We're in medium credit quality bonds. That's where we should be. Across the top, really, these are maturities. These are short maturities, intermediate maturities, and long-term maturities. Again, the short maturities aren't paying enough. The long ones certainly aren't paying and worth the money to put into long-term bonds. So we're right in the middle, right in the intermediate square. And that's where we should be. Okay. If I'm going too slow or too fast, please let me know. The next page is the equity sector. These bars, these are similar to what you just saw in Dave's presentation. There are 11 major business categories of stocks. 11. Okay. There are sub-sectors and subcategories of stocks, but primarily these are the major ones. Of the 11 major ones, there are 6 that are most favored. They are consumer cyclical, financial services, healthcare, communication services, industrials, and technology. Consumer cyclicals are like appliances, cars, big ticket items that only do well in good times. In bad times, you want food and you want, things that sustain you. In bad times, in good times, you don't want consumer defensive. That plays well in bad times. Although we've got at least something in each of these different sectors, the most of the money is in the most favorite, those 6 that I just mentioned. That we've got plenty of diversification here. Okay, going to move on. The next page is again another one of these bar charts, boring bar charts, but this is all about fixed income. Most of the money in the bonds that we have, and we only have like 10%, are government. The second largest category would be corporates. Those are the key ones. Corporates give you income, governments give us safety. And then we got a smattering of some other stuff here just for diversification. Not a lot. The next page is the international. Where are all our investments around the world? Well, 91%, the bulk of it, is in the United States. Why? Because the economy in the United States is far greater and better than anywhere else in this world right now. On top of that, internationally, they're dealing with geopolitical problems like Ukraine and like the Middle East. So we got to be very careful that we keep most of our money, because this is a conservative portfolio. We want to be very careful. We don't want to take risks and take chances. The next page is just cash flow. This is for me to see when the interest and dividends come in. More important are the next 2 pages. These are the performance pages of this portfolio. Take a look at the chart up at the upper right-hand corner. You're going to see 2 lines there. One line is blue, one line is green. The blue represents money that went into this account and money taken out of this account. You see the jog down in the center of this chart, the blue line, the jog down, that was 2013. We sent $12 million over to the MERS plan in 2013. That's why you see that jog down. The next 2 jogs on the right, this is money that we sent over to Estabrook to build up their portfolio. We took out of here. The green line, as you can see, is higher, and this is your returns. This is your profits. This is your performance. And the gap between the blue line and the green line here is getting bigger. And that's what we want. With money coming out of here, and because we want to sustain this fund for a very long time, we have to keep growing this despite the fact that money's coming out of it. So it's doing it. If you look down at the bottom right-hand corner, and this is since 2002, I believe, we've earned about $37 million in this portfolio. $37 million. Okay. The next page is simply the assets, the investments, and the holdings in this portfolio, performance for each of them by period. Year to date, 1 year, 3 year, 5 year, 10 year, and 15 year. And what's notable about this chart is you don't see any negatives in here. And that's what we want. We want good quality, suitable investments in this particular portfolio. And then finally, the last page, this is the composite or the snapshot of the total plan. All 3 components together, Estabrook, Wright, and Raymond James. And if you look at the first section going across the top here, the managers, Estabrook Capital Management has about $14 million in their portfolio as of March 31st, which is about 20% of the portfolio. Wright, Amit Khandwala, he's got about $24 million in his portfolio, which is about 34%. And then Raymond James has $32 million, which is about 48% of the portfolio. We're pushing up, Raymond James is pushing up against that 50% threshold. We're going to have to release some money over to Estabrook at some point. Not now, but certainly within maybe the next 3 to 6 months. it's getting too big. We've got to move it over. So that's just a warning flag for us that we're going to need to do that at some point. So I'll need to address that with you folks later on in the year. The total is about $71 million that we have in this portfolio. $71 million total portfolio, all three components. 71 million. Below that is the allocation, stocks and bonds, about 25% in bonds and about 75% in stocks. 3/4 of the money in the portfolio is devoted to stocks, which is good because stocks are doing much better than bonds. Bonds are important because it's a safety valve. What happens in the markets, when stocks are up, bonds are down. When bonds are up, stocks are down. So we need to have at least some in there right now, even though they're not paying a lot. We need to have that good balance for a conservative type of portfolio, which this is. Now, the bottom portion of this and the last part of this presentation is July 2013 is when the MERS, we took the money from all these accounts and we sent it over to the MERS plan. And what was left, the balance of it, $60,512,112, after sending $80 million over to MERS, that's what we started with. That's our benchmark back in July of 2013. Since then, we've taken out over $40 million to pay retirees, $40 million. But we still have the value of the account at 3/31/24 is $71 million. Okay, that's keeping our head above the water very nicely and without taking undue risk. We still have a good amount. We started with 60, and we've taken 40 out, over 40 out, and we still have 71 million bucks. So I think it's a pretty good turnout. The portfolios are doing well. It's doing exactly what we need them to do to provide for the retirees and for as long as we need that money. So that's pretty much it on my portion of the presentation. Any questions? Commissioner Farrow? Terry? Any questions?
I have two questions. Just going back to the last page where you're speaking about what was transferred to merge the plan, but there's that 19 million net value. What is that?
Just taking 40 million from 60 million. That's, yeah. So if we didn't take out that 40 million, we'd be considerably higher than we are right now. But if you minus the 40 million from the 60 or a net, you'd come out to $19 million. But the point is that we're fortunately still quite ahead of what we started with, despite the fact that we took $40 million out of the account for retirees. And I think you had another question.
Yes, and you were saying that eventually we would have to address the fact that funds would have to be transferred from the Raymond James to the Estabrook. And when you're saying moving that allocation, what is the percentage that we would need to stay under so that we are not
50%.
50? Okay.
That's the threshold. We can't go above 50 according to our mission statement. So
Okay.
if it continues getting higher, we're going to have to move it regardless. So I don't know when that's going to be right now, but it'll be within the next 3 months, I would imagine. And I would let you know what time is right for doing that.
And you said that could be in months?
In months, 3 months, exactly.
3 months. Okay.
For instance, if it starts to really take off, the markets take off, and we go above 50%, I've got to move money. I can't leave. Yeah, I've got to take it.
And the last one on page 5, that non-classified, what does that represent?
Oh, we don't know. Yeah,
you don't know.
We have no idea.
You have no idea what. Okay.
We have no idea what that is. We can only say that it's not classified because we don't have enough information to tell us what that might be, and we're not allowed to really report that or post that information unless we know for sure. We have to rely on all these vendors around the world, tens of thousands of stocks and bonds and mutual funds and everything else to give us the data in a timely fashion. So that number will change from time to time because it could be very late that we got the information, couldn't include it in this particular report.
And the reason why I'm asking is because what if that, is there a possibility of that? It's almost 2 million in there,
Yes.
and
Yeah.
that's the risk of losing,
Well, yeah, if it's, for instance, international, if all of a sudden
Mhm.
it showed up in international, 6%
Mhm.
shows up in international, I'd say, well, wait a minute, that's too much international. We got to cut that back. But right now, I can't tell what it is. So I'm going to leave it alone until I see. At 91%, the bulk of the stuff is in U.S. stuff, which it should.
Mhm. Mhm.
But if that creeps, if that comes down from 91%, all of a sudden it's 85% or even lower, it's too much. I don't want to be investing in international right now. So I would talk about, and you know how I would do that? The money that I have to send over to Estabrook, for instance, I'd say, fine, I'm going to take international stuff, I'm going to sell it and put the money over to Estabrook.
Yeah.
Yeah.
Thank you.
You're welcome. Any other questions?
Yeah, and I'm sorry, Mike. I was off for a couple of minutes there, but just basically between Bright and Estabrook, how do both compare? Well, in this past 12 months with
performance,
not only with each other but also with the benchmark.
With the benchmark, well, in terms of performance, you got to remember that Estabrook is selling stuff that they wouldn't want to sell. They're sending out at least $500,000 a month goes to the retirees. So they're taking money and they're selling stuff to come up with $500,000 each month, and they have to sell good stuff in order to. So we can't really compare it because we know that that's going to hurt their performance. The question is, how much is it going to hurt their performance? And that, when I look at the numbers, I see that, well, they're pretty close. It's not too bad, given the fact that he's losing stuff that he would keep. Like, Wright keeps stuff. They keep stuff, good stuff, because, the money's coming out of Estabrook. So we have to really take that into consideration when I look at the numbers. And I track this every single quarter. I track the performance since the beginning, since the MERS, since we moved all that $80 million over to MERS. I actually have those reports that show me, where we stand performance-wise with all the different components of this plan. Yeah, I track it all the time. Every month I get statements in and I keep track of it. And I call.
Do you determine? I know Estabrook is paying off into the fund, but do we kind of keep track of maybe some sort of an average amount that they would make off whatever balance that they have? I know the balance changes, but is it something like they're at 7% on a since last year, 10%, whatever the hell it is?
Yes, I do. I track
Okay.
all. I track it, and I'm happy to share it with you. Yeah, I track it all. And every single month that the statements come in, I input all that information into my tracking system to see where we are with everything. Yeah, and again, I'd be happy to show them to you. Right. I have it, but I. No,
and that's fine, Mike. But I'll take your word for it that they've been productive.
Yeah, and again, I want to show it to you because it explains what's going on, and you can see the difference. And I've talked to Estabrook about it, and I understand why their performance is lower than the Raymond James and Wright Investor Services, because he's constantly pulling money out, and it's affecting their bottom line. It's affecting their performance. So I've got to give them a little bit of leeway with that. But I watch what they invest in, and I watch how they're investing. I watch all the confirmations coming in to see what they're selling, what they're buying, to see if this stuff is appropriate. And I take a look at their reports that they send me every month to see where they stand with everything. So, again, these guys have different strategies. They have different approaches. But at the same time, they're doing what they should be doing. And, my job is really to make sure these managers are behaving essentially for the benefit of the Bridgeport, and they're building their portfolios and protecting them for the benefit of retirees and their future distributions. So it's critical, and they know that. And they're good managers out there. I've looked at other managers, as a matter of fact, but the risk of adding managers or deleting, taking managers out and hoping that they're going to do as good a job or well is a big risk. Not for me personally. I mean, I could do it myself or you or whoever else, but for an organization like this is critical that we are very careful about doing those things. If I saw any really big problems from any of the managers, including Raymond James, then there would be some changes that would have to be made. Don't see any as yet.
Okay.
But I would like to share that information with you at some point so that you can see it.
No, that would be great. Thank you.
Yeah. Anything else? Tom, Ed? Nobody? Chris? Gotcha.
Dan answered, or Commissioner Roach asked my question.
Okay. All right.
Okay.
If there's anything else, just give me a call. Let me know if you have anything else. In the meantime.
Great. Mike, thank you very much. Thanks for your time. Appreciate it.
Yep.
Thanks, Mike.
Take care. Nice to see you all.
You too.
Okay.
Thanks, Mike.
Bye-bye now. Bye-bye. Bye, Lieutenant Lyons. Thanks again. Appreciate your help.
It's nice to meet you.
Same here.
Okay. Moving on. Do we have anybody else here who requested to speak this evening on the agenda?
No, sir. Both 3C and 3D requested to be moved to next month.
Okay, very good. All right, so we have moving along. We have nothing under old business. We have under correspondence a letter from the union president regarding a special meeting that was back on April 30th. I think everybody has received that. We also have letters of appreciation, one from retired Captain Cotto, and he now is working for the Connecticut State of Community College, recognizing Officer Andrew Oram, Officer Sandra Canones, and David Santiago for their volunteer assistance at the Connecticut State Community College presidential inauguration. Congratulations to those officers. We have nothing under widow's pension, but let's just note that we may need a special meeting in the near future to grant a widow's pension on something that is at least time sensitive, if not emergency situation. And moving forward, we have communication from the city traffic engineer in items under 8A, which is request of city engineers traffic, city traffic engineer to approve the following. One is to install an all-way stop sign and no parking here to corner sign at Stillman Street and Park Street. And the other is to install a all-way stop sign and no parking here to corner at William Street and Stillman Street and William Street and Bennett Street. The city traffic engineer recommends that we approve those. He's went through the necessary studies, and that's his recommendation. That being the case, unless there's any issue, I'll entertain a motion to combine those two items under 8A and approve.
So moved.
It's been moved by Commissioner Lyons. Seconded by Commissioner Farrell. All those in favor?
Aye.
Any opposed? Okay. That has passed. We have 3 items under 8B, and this is a request of the traffic engineer recommending not to approve the following. We'll start with the first one, a handicap parking sign at 34 Ridgewood Place. I know I had a conversation earlier. There's an existing driveway at 34 Ridgewood Place, but the applicant is claiming, and I think rightfully so, that the driveway is, for the size of a motorcycle, maybe it's a very narrow driveway, and when I brought it up, and I mapped it. There is a car parked there, but I don't know how that car, and it's a compact car, and I don't know how they get their doors open, for crying out loud. It's like they're wedged in between the 2 houses. Commissioner Lyons?
Yes, it's a house not far from where I live. I was made aware of it by the applicant's daughter, who I believe is on tonight to listen in. I drove by it. The width of that driveway is 6 feet wide. I have a photograph with the car. To get out of the car, you can't open the door. You'll hit the house. On the other side is the neighbor's yard, which you actually have to use as an easement just to get out of the car. They're not happy with it. I don't know if anybody could see this. That's, if you notice, the tires are in the neighbor's yard, and you can't open the door to get out on the driver's side. So you have to back it in, and hopefully the neighbors aren't around. And I don't know if that's visible.
No,
it's
that's pretty much what I brought up when I looked at
driveway for a motorcycle.
Yeah, I'd say driveway, and maybe one of the old MG midgets or something like that I remember I used to have would probably fit in nicely. But yeah, I would agree.
The applicant is 85 years old. It's very difficult, especially if it snows so difficultly. Then you can't step into the neighbor's yard. It's something worth I would recommend consideration to pass.
Any other discussion? I'll take that as a motion to approve the request of the applicant, and we're actually not approving what the city attorney is asking us not to approve, if that makes sense. So the motion is to approve of the handicap parking sign at 34 Ridgewood Place. Is there a second?
Second.
Seconded by Commissioner Farrow. Any discussion at all?
I just have, and I just have a discussion. I just want to make it known, and I know that we've asked this question time after time, even though if the handicap is approved, it's not necessarily for that individual. If someone comes there prior to, you're still going to be in that same situation. So people have to understand that that request is being made, but not specifically for that individual.
Well,
so I just want to make sure that I mean,
it's made for the individual. Your point is absolutely correct, that if someone else comes along and with a handicap sticker, if somebody moves in across the street, and they have the same rights to that spot as your mom would have, miss. Okay, then that's understood. It happens on occasion. We get phone calls, say, "Oh, someone's parking in my spot," and that kind of jazz. You don't know, you don't own the spot. You just, have the ability to park there, and it's because of your request that it's there.
Good point, Commissioner Williams. Good point.
Is that okay? That's all understood.
Thank you.
All right. Any other discussion on the motion? It's been made and seconded. All those in favor?
Aye.
Aye.
Are there any opposed? Okay, that motion is approved, and the parking handicap parking sign is granted. It'll take a little time before it'll be on the list of lines and signs. So please be a little bit patient. But if you don't see anything after say a couple of months, you can reach out to us and we'll look into it. Okay.
Thank you so very much. I really appreciate your help.
Thank you.
Sure thing. Thank you. Okay, the next item is, there is a handicap parking request at 196 Morningside Drive. The city traffic engineer recommends us not to approve based on an existing driveway. This house is a multifamily, so there could be the possibility that they're not allowed to drive. And I'm sorry, I didn't see the application, whether or not they check the box where they don't have permission for the driveway. They do. But I would leave that open to the board. And again, yes.
Commissioner Roach, you said they do have access or do not?
Well, then no, there's a driveway there at the house.
Okay.
Whether or not they have permission or not, I apologize. I usually, I didn't go through.
Yeah, I was looking
that.
for that as well. So Morningside, I would say if we can table this and request that information, I can make that motion.
We'll try to get that information. All right.
Right.
There's
Before we vote on it, because I used to live on that side at Morningside off of Harlem Avenue. And there are a lot of two families, as I owned a two-family, and my tenants weren't allowed to park in the driveway.
Lieutenant Lyons, do you have any info on that? I'm missing.
If I didn't attach it, I apologize.
No, I don't think it might be an error on my part as opposed to yours.
I can resend it or we can table it, but according to the application, it does say that they do have access to the driveway, but other family members park in the driveway. She has a son that has MS and a husband that has surgery on the knee, and he is in a wheelchair. But I can resend it. We can table it. We could take a look at it. It's up to you guys. But that's what the application said.
All right, thank you.
You're welcome.
All right, there's a motion to table. Is there a second? Not everybody. Oh, hey, thanks, Tom. It's been seconded. All those in favor?
Aye.
All right. Any opposed? Okay. Moving along. 100 Bassick Avenue, same request. City traffic engineer recommends denial. And this is a single family with an adequate driveway. So unless there's any issue, entertain a motion to approve the request of the city traffic engineer, which is not to approve. A dog's made the motion to approve. Is there another animal out there to second it, or we got to rely on the humans here? Okay, I think it's Ed, is that a motion, or is that just showing us your pen? Okay, motion's made by Commissioner Farrow. Is there a second? Not everybody at once.
Second.
Seconded by Commissioner Williams. All those in favor?
Aye.
Any opposed? Okay.
Why is that?
The last is a request from the city engineer's office that we take no action to install a handicap parking sign on 49 Allenson Road because there already is one. So no action required there. So therefore, I think we mentioned before that, we're probably going to need to get 4 commissioners together to approve a widow's pension. Is that one of the members of the department, or retired members of the department, that recently passed away? Lieutenant?
It's someone who passed away a couple years ago.
Oh, okay.
But it was approved, as a regular pension. And I guess the information that it was actually a disability pension wasn't put forward to you, to the commissioners. So what they're asking is that it gets changed to a disability pension instead of the regular pension. And I can gather all that information.
Yeah. And assuming that the retirement or disability retirement was from, or the member of the department had enough years in so that the only effect on a disability pension would be not the city's contribution, but the fact that it wouldn't be taxable by the federal government. Does that make any sense to you, or maybe you're not that familiar with the person we're talking? Well, I don't know. We'll have that discussion before
He
that.
retired before I came on the job, so he retired prior to 17 years
Okay,
ago.
all right. And it wasn't somebody that put 5 years and retired on a disability pension.
I don't
that
believe
jazz.
so.
Okay.
I will definitely gather more information if we want to
Yeah.
pick a date, and then I can get more, or if you want me to get more, present it.
No, we're fine. We're good. We're good. Okay, we'll set up, we'll be in touch to set something up and for a 5-minute meeting if we can get all the right information together. Good enough?
I'll work on that this week,
All right. Thanks, Lieutenant.
of course.
Unless there's anything else, I'd entertain a motion to adjourn.
So moved.
Moved by Commissioner Lyons. Is there a second?
Second.
Seconded by Commissioner Farrow. Any discussion on the motion to adjourn? Hearing none. If Anna was here, she'd jump in. Hearing none. All those in favor?
Aye.
Any opposed? Okay. Thank you, folks.
Have a good night.
Hey, everybody.
Good
Bye-bye.
night, all.
Nice job. Thanks,
Have a good one.
Stacy.
Thank
All
you.
right.
Good job,
Good night,
Dolores.
Lieutenant.
Thank you.
Bye, Dolores. Hey, nice work, Dolores.
All right. Have a good night,
Thank
everyone.
you. Good night, everyone.
Hmm.
And what-